All right, guys. So the all right, team. Fed Reserve is going to announce their rate hike decision. My bad, the mic isn't hooked up. I probably sound terrible right now.
All right, guys. We got the Fed decision coming up today. It's going to be a big day tonight. Anything to drink, man. Hold on. I gotta fix that. Let me get a coffee in the books, bro. It's the day. It's the Fed. It's the Fed day, guys. It's FOMC day. What are you guys watching? Let me know what you guys think. We're gonna do a poll as we normally do. I don't know whether good or bad. Oof, man, y'all tell me, bro. I really don't know. As we normally do. How much will the Fed raise rates? Oh, hey, baby. Hey, will you do me a favor? Will you make me a coffee or something? I didn't make one. Yeah. You have it? Yeah, if you could bring me that bottle of Diet Coke, I'll use that. All right, I'm sorry. Thank you, baby. That's good. All right, love you. All right, how much is the Fed going to raise rates? 50 basis points, 75 basis points expected. 100 basis points or over 100. Thank you, baby. Vote on the poll. We've been doing this poll every day. Here's the link. Check it out. Again, vote on the poll. We got the poll live right now. 48% of you so far, 70, 75 basis points. That's what I think as well. I think we're going to go 70, 75. It's time. All right. We're going to do a Twitter poll as well. Calls or puts. You drop it in less than an hour. We get this data. Less than an hour, guys. Y'all do me a favor. Hit the like button. You see, the SPY is choppy, bro. We bowed out of the market this morning, and it looks like it was the right move, to be honest. Vote on the poll. Calls or puts. Here's our Twitter poll. Open it up in a new tab, of course, if you can. I don't know, man. I think it's almost certainly going to be 75 basis points. I don't think they're going to be more aggressive than that. I think that's a little bit too excessive if they do. I think it's going to cause too much short-term pain, but it's possible. It's certainly possible. Again, the numbers I gave, I think about 70% chance we show 75 basis points. I think we got maybe like a 20, 30% chance that we're going to show 100 basis points or more. More is even less likely. I would say more than 100 basis points is like less than 5% chance. Maybe less than that. But yeah, today's the day, guys. Today is the day. We'll see what we get, to be honest. It's a big day. It's a big day. Yeah, we'll see how the market reacts here. You can vote on the poll. We got 83 votes so far. 45% are saying 75. 41% are saying 100. And I know banks are really pushing. I know banks are really pushing for that. You know. Wait, why is my poll acting weird on Twitter, bro? Dude, my poll just said it had 15 votes. Now it's saying it has 5 votes. What? Dude, Twitter is strange. All right, guys. All right, there we go. Now it says 22 votes, bro. I don't know what these Twitter polls are showing. On Twitter, 60% of you essentially are saying puts, 41% are saying calls, essentially here. So, again, it's time. Let me know what you guys think. We got almost 200 people here already in like 5 minutes. So, hey, what's up, guys? It should be an interesting day, man. If it's 100, we're going to 3,500 on the S&P. Will you be trading futures on the hike? I'm going to be trading them some. But right now, we're just going to be paying attention to the stock market reaction. I'm going to let things settle down before I take any positions there. It's just too risky, to be honest, trading, ahead of this. We don't know what they're going to say. We don't know what the market's going to react. After things settle down, maybe 5 or 10 minutes after that, we'll see, Bitcoin new low. If the internet is 75 basis points, the market will go down. I'm not sure. Again, let me know what you guys think. We're going to be sending out our newsletter as we do at beginnertrading.net/members. Join our newsletter. We're going to be sending it out to. Completely free to sign up to our newsletter. We're going to be sending out this newsletter as well. Market's starting to correct back down on the downside here. And again, you guys saw me trade for the first 15 minutes and then be like, nah, this sucks. I'm bowing out. It looks like it was the right move. The market has been in a completely sideways range this entire time. And so again, I hope you guys can learn a little bit from what I did today. I didn't force it. I said, look, this isn't favorable. And I just bowed out. Most new traders give their money back in these markets. It's one of the reasons most traders fail is because they can't stop themselves from trading this type of market. We bowed out this morning and, easy. You know what I mean? We're not going to force it. And, again, ahead of these big economic releases, a lot of the time there's just indecision, apprehensive trading, just not a lot of stuff going on. And so in that regard, you got to just be smart, to be honest here. There's just not a lot of stuff going on. There's just not a lot going on. And so if you force things in these markets, if you can't take a step back, then you're just doomed to fail. Rate hike decision is going to be at exactly 2 p.m. in exactly 43 minutes. And we're going to cover it fully. This conference starts at 2:30 p.m. Y'all do me a favor, run that like count up. That's right. Trade like a spoiled brat. If it's not just right, Goldilocks complex. If it's not just right, you bow out. That's really there's a very famous quote. And the quote goes something like, money is not made in trading. Money is made in waiting. And that's very, very true. Very, very true. Yeah, very, very true. Very important to understand. And yeah. Oh my gosh, I just deleted the whole block. Hopefully it didn't save. There we go. Yep. All right, cool. I could drag this up. All right, guys. Yeah, we're getting ready to send. There we go. All right, team. Whew, calls or puts, guys. Vote on the poll, man. We got a bunch of people here. Again, the stuff is dropping at 2 p.m. I'm sure we'll have even more here for the actual rate hike decision. Right now, we have about 250 people here. Hit that subscribe button if you haven't already. We're going to be covering it fully. We're going to drop the rate hike decision as soon as it goes live at 2 p.m. We're going to cover the full press conference. We're going to stream it all live. You'll be able to watch everything right here. And so be ready, guys. Be ready. We're getting ready to send our newsletter out now, as we normally do. And yeah, good luck, team. Market testing lows now. Q is lows of the day, that is. Nothing too crazy yet. There we go, sending the newsletter out now. But yeah, here's the Q. The Q is actually doing a little bit better than the SPY is. So tech is leading the market a little bit. The broad equities market is lagging a little bit in the S&P, testing the bottom of the range under VWAP. The Q is actually just now starting to test the VWAP here. So we still got a lot of time. What's up, Mathis? Hey, what's up, Gotham? Staying out until 3. Yeah, that might not be a bad move, bro. Make sure to not trade with stops so you don't get wicked out and lose. So in options, that would be called a strangle, UD. Yeah, again, let's see what we get. Y'all be safe. Some good gifts to post. It's time, guys. Is it difficult to get accepted for YouTube ads? Do you know? What do you mean? Trade after the meeting, never trade before the meeting. Yeah, for sure. There's just too much volatility ahead of time. You know, it's a coin flip. There's just not a lot of edge. There's mostly coin flip. Middle of the night here in the Philippines. Always thank you for doing the live streams during key policy announcements. All good, Toby. Hey, man, we appreciate you, bro. It is time. Daniel, what's up, man? Expecting 75 basis points. What's up, Richard? In the market to remain flat. Yeah, I hope that's the case. Honestly, I think that would be a W for the market. If we show 75 basis points and the market is flat, I think that's a W. Yeah, so yep. All right, guys. So we got Joe on Twitter saying, wow, 50-50 calls versus put. Yes, after the results are out, we only hear from those who made money. Always like this. People love to show off their wins. Yeah, hey, 50-50 split. 50 votes, 60% of them are saying puts, 40% are saying calls. Mostly bears. And I mean, what I'm noticing is that usually for these big economic releases, it is mostly bears. Like, mostly bears are going to be the ones who are voting on these polls. And that's okay. You know, that's okay. The news drops, market drops this news in about 37 minutes. 37 minutes. Hey, thank you, Home. Thank you, sir. We appreciate it, man. Like getting paid for views on your YouTube video. Yeah, you just got to be a part of YouTube AdSense. You know, Google AdSense is what it's called. All right, guys, it's time. Calls or puts. Put your bets on the table. Let's see what we get, guys. Again, I'm betting 75 basis points. That's what I'm expecting. My guess is we're going to show 75 basis points, and the market's going to somewhat react positively to it. Okay, my logic behind this is that if you look at it the last 20 days, sometimes, you know, we can be a little bit oversold heading into these conferences, and I think that might be the case here. I think that a lot of the time they do a good job at balancing it specifically, and so, but again, I might be wildly wrong, okay? I'm sure if I'm wrong, I'm going to have a few people like, nah, bro, you said it was going to go up, and we just crashed, you know? And that's okay. Listen, I might be wildly wrong. Maybe we show 75 basis points and it just tanks, but I think 75 basis points is the most likely situation. Again, I might be wildly wrong. Maybe we show 100. Maybe we show 50. I think that's even less likely, but again, I'd give it about a 20% chance we're going to show 100. I'd give it If we do show 100, the market's going to drop almost certainly. Maybe not though. It's never 100%. Sometimes these economic releases can just be kind of iffy in terms of like predicting the reactions. But I know if we show 100, the market's probably going to drop. I know if we show 50, the market's almost certainly going to bounce. And, if we show 75, it's a coin flip. I think we might go up, though, because we're a little bit oversold in the last 20 days. Really, over the last year, if you look at the SPY, we're a little bit oversold. And so, I tend to be an optimist, but maybe I'm mildly wrong. I'm cautiously optimistic heading into this. And hopefully Jerome Powell tries to balance things out. He said some pretty bearish things, during the CPI report, and you can see CPI tanked us last Tuesday. We had worse than expected inflation, and so in that regard, maybe he's going to do more to combat that and raise rates a little bit higher. Again, let me know what your guesses are. More likely 50. I don't think 50 is more likely. I think there's, 0 would just make the market fly. I hope that happens, but it's unlikely. Yeah. 50 less likely than 100%. Yeah. I agree as well. Agree on the positive reaction. I think we're baked into that already to a certain extent, but maybe not. Again, we still got 34 minutes until this data comes out. Press conference is going to be at 2:30. We're going to cover it all fully here. So tech is neutral, but the SPY has started to test bearish territory here. Here's the SPY, which is the mini S&P. It started to test the bottom of these lows here. It's at 385.60s. Again, the low of market hours right now is at 385.40s. It's still not the low of the day, though. Pre-market opened up right here, and so the low of pre-market is really this 384 level. We've been mostly moving up. Let's see. Okay, so now the low of pre-market, is going to be right. Let's see. We'll go up. Okay, so low pre-market is 384, right around the previous closing price. So right around where we closed yesterday is the low pre-market. The low pre-market, I'm sorry, is down here at 382.70s. So we're still pretty far away. So on a intraday basis, you could say we're bullish heading into it, or upward, maybe overbought short term. But I think on a larger scale here, if we look at like a 20-day chart, we've been heading down pretty drastically over the last 20 days. Essentially, inflation is causing a lot of people to fear. And we're going to post the data as soon as it drops here, Anton. What's up, Cincinnati? What's up, man? 2 p.m. on the dot is when they're coming out with it. They raise funding rates to fight off inflation, right? So higher funding rates is a good thing. I'm a bit new to the whole CPI, FOMC meeting stuff. Yeah, so Mathis, this is the way it works, okay? Every 6 weeks, the Fed meets with their FOMC rate hike decision on whether they want to raise or lower interest rates. It's all based off of how high inflation is. If inflation is really bad, they raise rates more. But when they raise rates more, it causes more short-term pain because it means that interest rates are higher short-term, right? And the whole reason they raise rates is they raise rates in order to combat inflation. The higher they raise rates, the more it discourages spending. And in that regard, I mean, the more businesses have to lower pricing, and thus it combats inflation, right? So they raise rates in order to combat inflation, but it causes short-term pain when they do, but it's a more optimistic thing for long-term inflation, if that makes sense, right? And so there's a balancing act. If they raise rates too much, like again, you got a lot of people expecting 100 basis points today. If they raise rates that much, it's going to cause drops in the market because, while it's going to do more to combat inflation long term, it's still going to be an aggressive rate hike. It's a tell over the overall economy and inflation. And so the Fed needing to raise rates 100 basis points is telling you that the Fed is worried about inflation, right? And so in that regard, it's going to cause more short-term pain, but long-term, it's a more optimistic thing, if that makes sense, in terms of combating inflation. And so again, every 6 weeks, they drop the interest rate decision, the rate hike decision at 2 p.m. Eastern Standard Time. So that is in almost exactly 30 minutes, in 31 something. And then 30 minutes later, after the interest rate decision, you're going to see the stock market react at 2 p.m. We're going to cover the rate hike decision here, as we always do, and you're going to see the stock market react. The market's going to react one way or another, whether it goes up and down and stays neutral, whether it goes up, whether it goes down. You're going to see the stock market react at 2:30 p.m. Eastern Standard Time. Jerome Powell is going to do a press conference. and he's going to talk about why they chose to make that decision. He's going to say whether he's bullish, bearish, long-term, short-term. I mean, we're almost certain that he's worrying about inflation right now, but they're going to say some things that also influence markets during that 2:30 press conference, and we're going to stream that live here as well. So, hey, y'all hit the subscribe button, guys. We appreciate it. Yeah, the numbers are out publicly, so you're going to be able to see them on every major news channel here, but we're going to cover them, watch the stock market reaction, and then we're also going to stream the full press conference live right here as well. So, yeah, we'll see what happens. Hopefully, it's not too crazy. Hopefully, I think a neutral reaction is a W here. I think it's a good reaction. I just don't want to see bearish chaos drops. We've already had so many drops over the last couple weeks, months, that I'd prefer to see the market do well. When the market doesn't, people suffer, and that's what people, even bears need to understand that. Like, you might be right about your short-term bet, but it's sometimes worse whenever the market performs poorly long-term. I guess it depends on what size your short was, but yeah, we'll see, guys. Hey, all good, Mathis. Yeah, no worries, man. What will happen after a 75-point rate hike? It's a neutral reaction. It's all relative to expectations, and so everybody's expecting 75. The banks are pushing for 100. So if we show 75, it's essentially a neutral reaction. It's on par with expectations. The reason I think we might bounce a little bit if that happens, though, is because, again, if you zoom out here over, a longer-term 90-day chart, we've had some pretty big bear action over the last 90 days. You can see the market's mostly dropped over a 90-day period. If you look at like a 30-minute chart, it's a little bit easier, I guess, to kind of see. But we've dropped a lot over the last, couple weeks, months. And so in terms of like an extension level, maybe we're oversold, which is, too much down. And in terms of extension, maybe we're extended on the downside, and we might rebound if we show a neutral reaction. At least that's what I'm cautiously optimistic, hoping that happens. Again, it's never a set thing, though, and it's very possible that we show 75 and then we also just tank. That's certainly possible. If we show outside of that range, again, in my opinion, it's going to cause a knee-jerk reaction. And so outside of 75 basis points, if we show 50, which is incredibly unlikely, considering what inflation has been and the inflationary fears that the whole country and the world essentially has right now, I think it's very low probability that we're going to show anything under 75 basis points. I think if we show 100, it's a little bit easier to predict in terms of, like, if we show 100, it's probably going to cause a bearish reaction in the stock market. 100 is more aggressive, which means more short-term pain. And people that are front-loaded into shorts over the next couple of days, if we do show 100 into that weakness, they're going to start taking profit. Bulls are going to cut out of it because they're going to see that as weak short-term as well. And that's just going to cause kind of a snowball effect in the market. If we show anything over 100, that's going to be a very obvious dip in the market. And again, I'm saying all this, but nothing is 100%. I've been wildly wrong before, and it's certainly possible, it doesn't follow this blueprint. It's certainly possible that happens. But anything under 75, the market's going to fly. The market's going to bounce almost certainly. It's going to rip up. Anything over 75, the market's probably going to drop. Anything over 100, the market's almost certainly going to tank with like a little mini flash crash. And so we'll see. But yeah. Hopefully, again, I want to see the market do well. TMC, isn't that the metal company? Is that right, TMC? I can kind of remember what these symbols are. Yeah, I don't know anything about these individual stocks. What's Precious Metals doing? I mean, that's kind of seems like the right sympathy in that regard. But everything's kind of dropping here. It's just I'm not really into penny stocks. I think they're highly speculative, and I think they're just very difficult to predict. Even the catalysts are sensationalized here, so I just kind of stay away from them. I'm mostly, if I'm swing trading or investing, it's mostly in large blue chip companies. I'm not saying you can't make money trading penny stocks, but they're less reliable. What if it's 75 basis points? It's a coin flip. Nobody knows, Yeah, so I cut my Disney trade yesterday, and it looks like it was the right move. So I got out up here at like 107, high 107s. Yeah, I mean, I believe that, Zachary. Penny stocks are performing better than blue chips. Well, blue chips are just getting hit. But in that regard, you can kind of look at blue chips like they're on discount right now, And I think long-term blue chips are the easier bet. And I think, stuff like Disney, I love Disney in terms of the company and the stock. I think it just makes so much money that, it's one of those things where Disney as a company is just an easy, safe bet long-term. I think a lot of the time, people They doubt it, but I think it's so diversified that it'll probably be fine long term. And so I think when you get really cheap value here in blue chips like Disney at $100, I think that's very cheap relative to what they are and how much money they make. And so I tend to be one that kind of averages in on these big weak moments, and I have been on Disney for the last couple weeks. If you look at my trades here on Disney, you can kind of see a very common theme, which is that I kind of swing trade them, hold them overnight. If we go to the start, you know, you can see I add into Disney, sell at the top, add into Disney, sell at the top, start adding back when it dips, start selling when it bounces, add in on the dips, sell on the bounces. And I just got to rinse and repeat that strategy. You see, I sold my last position up here at 107.90. I never added back on this dip. Looks like it was the right move. But, you know, as it gets cheaper and cheaper, close to 100, I kind of get the itch to start adding more to it. And we'll see. See, ETH. What's ETH and Bitcoin? I heard Bitcoin was crashing right now. Is that true? Again, I made the decision not to trade anymore today. I day traded the first 15 minutes in futures. Now Bitcoin and ETH are running up, so they look strong right now. I thought somebody said they were crashing. Maybe I misheard. Bitcoin back up to 19.5K though. That's good. ETH back up to still under 1400 though. They've had a tough few weeks here. Yeah, decision at 2 p.m. Powell speaking at 2:30. Yeah, we'll go ahead and put this up a little bit larger so you guys can see it. I put this up just because a lot of people are asking about it, and yeah. All right, here's the Q. Again, market's sideways right now, though. Again, a lot of the time into these big economic releases like CPI and FOMC rate hike decisions and that type of stuff, a lot of the time they're sideways. People are less likely to take sizable positions. Buy the rumor, sell the news. It's kind of what's happening with the market to a certain extent, potentially as well. But again, we got 24 minutes until the interest rate decision happens. 24 minutes, guys. Again, it's time. Hit that subscribe button here. Hit the notification bell. We're going to cover all the big economic data, all the numbers that dropped this week. Tomorrow, I think we have jobless claims numbers dropping, so we're going to cover that as well. We cover all the big earnings that are happening as well. We cover all the big economic data like CPI, PPI, jobless claims, unemployment data. You know, yesterday or the day before, we covered what did we cover? We covered building permits and housing starts. We covered Canadian CPI. So we cover all the big economic data here. So, hey, if you want a resource for trading, it's a completely free resource. We don't charge for any of our content. Subscribe. Do it now. Tomorrow we have, what do we got tomorrow? We have tomorrow we have jobless claims, the U.S. leading index at 10. Yeah, Bitcoin, ETH coming up. Alexandros, we're going to be getting the data as soon as it comes out. Like literally within 10, 15 seconds of 2 o'clock, we're going to report exactly what the interest rate change was. And then we're going to stream the full press conference that happens from that here as well. So you'll be able to watch it, hear it, listen to it, everything. Yeah, I'm not trading right now at all. There's no way. How do you feel about healthcare stocks in general? Neutral. Dynamo. Not confident enough to take any sizable, bet on any on them right now. Not really bearish either, just not really sure. Yeah, if it's 100, we're almost certainly falling. When we get our numbers, I'm going to 70x. Hey, good luck, Kim. I hope you make money. Bitcoin hitting resistance at 19.5, trading between 19 and 19.5. Yeah. Bullish, but who knows? It could be bad. Yeah, I'm not taking anything right now. Again, I started to trade this morning, but then I kind of cut everything and didn't force anything else. We're up a little bit from our SPY trade this morning in pre-market. We made about $25 on the SPY, but we didn't really take any huge positions today just because I think it's risky. It's a risky bet. to be honest. It's a risky thing. So. All right, Q pushing up, SPY pushing up to 386s. If it's not today, 100 basis will be in October. Maybe. I hope it's not today. But it also depends on what inflation's like. One of the reasons a lot of people are expecting an aggressive rate hike is because the CPI, I think they expected like 8.1%. It came in at higher than expected. And with all these big fundamental releases, guys, and I always say this, but it's important to understand, it's all relative to expectations. And so we can be incredibly aggressive in terms of rate hike decisions, but if they expected us to be more aggressive, then the market will still probably react positively. It's never a sure thing, but it's the same thing with like earnings reports. A company can lose 100 million, but if they expected to lose 300 million, they're still going to fly up. And so in that regard, it's the same way here because it's all about expectations. And so while 75 basis points is conventionally a very aggressive rate hike decision, it's still ultimately, what's expected here. It's what everybody's expecting. And so in that regard, it's not going to be a complete disaster when they announce it. Now, if it's 100 basis points, I think I saw a quote, and maybe I'm wrong. The last time we got a 100 basis point rate increase was 25 years ago. Is that right? When was the last time we got 100 basis points rate hike? All right, so the Fed hiked rates by 100 basis points 7 times between November of 78 and May of 81. And so, yeah, it's been decades. Some people are saying the Fed may, quote, just get it over with a 100 basis point rate increase. And that's possible. Again, it depends on what they're trying to do. They're trying to do a soft landing. And so in that regard, I think they're going to ease into it a little bit more to accomplish that. But, to a certain extent, 100 basis points would kind of like rip the Band-Aid off, so to speak, and just kind of get it done. And maybe, but Diet Coke is bad for you. Yeah, I know. Honestly, we got so much stuff going on in my house. I haven't really talked about it on stream, but we're dealing with stuff with my son at school with like his, ADHD. We're dealing with they found mold in our bathroom. And so my downstairs is getting renovated. And so it's just kind of one thing after another. I don't want to drink Diet Coke, but I didn't get much sleep. And so, I'll be okay. Yeah. I hope it for 100, please, so I can buy more. Yeah. Where can I see the rate hike as quick as possible? I mean, right here. You can also check every major news source that comes out. We're going to cover it as soon as it drops. But, if you want it faster than I can report it, I mean, you can check any major news source. Check out the link in the description for Benzinga. Benzinga you can try out for free for 2 weeks without needing a credit card, I think. So, yeah, check them out. Q's starting to push up to break highs. We'll see if we get some better movement. Q's starting to push up. So again, we're very choppy today. Very choppy. Now do me a favor, hit that subscribe button as well. Let's try to break 86,000 subscribers soon. The announcement is at 2 p.m., so in exactly 17 minutes, and then at 2:30, the actual press conference. They're both going to influence markets in different ways. The rate hike decision is going to be announced at 2 p.m. We're going to cover it as soon as it happens. Within 15 seconds, we're going to drop the numbers so you guys can see it. I really don't recommend trading throughout any of that. I don't think even trading as soon as the data comes out. You might think, hey, the data drops, let's take the opposing side, or let's take that correlated side. But that's not a smart move either, in my opinion, because these can be very wicky. They can move up and down. We can have some brash reactions to this stuff to where it's very difficult to see which direction the market is heading. And so there's just a lot of gambling going on in that situation. And I certainly don't recommend it. What I'm probably going to do is wait for the markets to settle down a little bit and then start trading that if we can. But again, I'm going to have to wait for the markets to settle down. So I'm not going to trade the initial, I'm not going to trade right at 2 p.m. Because I think there's just going to be, just big upward movement, big downward movement, big upward movement. It's just going to be chaos. And so it's just very difficult to trade chaos. You want boring movement to capitalize on, not exciting. As much as it's fun to trade, there's just low edge, low probability kind of coin flip, type of stuff. Yeah, don't sue me. No idea what anything's gonna do. Hey, do you, Andrew? I'm not mad at you, man. Diet Coke is bearish, eh? Yeah, I mean, I don't know if there's any mold here. I'm not allergic to anything. I don't notice anything in my house, but Carol, my wife, is incredibly sensitive to all of it. And so it's like, I don't notice anything, man. I could live in all this. I'm not allergic to anything that I know of either. My house was like a zoo growing up, and so I had, I'm not allergic to anything that I know of, but my wife, on the other hand, she is sensitive to all these different things like mold, dust, animal fur, dander, she's allergic. And so I'm just kind of, I don't notice any of it, but I'm not saying it's not there. I just don't notice any of it. 150 basis points. Unlikely. Market making a giant move up. Wall Street already knows it's 75. Yeah, 75 is essentially, it's pretty set, but they could always shock us. Again, I think it's either 75 or 100. If it's 50, I wish I bought calls because the market's almost going to fly. But it also might cause some fear. Like if it's 50, people are going to say, hey, is that enough to really combat long term? It's Friday, the job report. Friday, manufacturing PMI. Yeah, job report. Yeah, JP speaking at 2 p.m. Friday as well. I had somebody tell me that JP wasn't speaking. Is that true? I mean, I assume he was speaking, but yeah, we're all just guessing 100%. Yeah. Yeah, look at the market rip, guys. Market's running up here on this, ahead of this report in 13 minutes. Market's popping up big here. May I ask you where you get the data when it comes out? My little trick for getting the data is, there's a lot of sources that have like chat rooms where they immediately report the news as soon as it comes out. I'm using one of those. I use TOS News, Benzinga a lot. Benzinga drops the news pretty fast. So yeah, there's just a lot of places you could look. I kind of pulled 3 different sources up, and then whichever one drops it fast, I just say it as soon as it comes out. There's always maybe a 10-second delay, though. None of them are going to get it immediately. You can refresh your page and get it probably as fast as some of these places, though. But, you're going to have to actually read the report that comes out. It's a PDF file that drops, and so you can read that as soon as it comes out at 2 p.m. That's probably the fastest way. But sometimes it's not exactly at 2. Like, I've refreshed my computer a bunch, and it's just not showing up sometimes. So here, I'll show you guys. So if you want the data as soon as it comes out, all right, this is what you're essentially going to have to do. All right, so here's the FedReserve.gov, monetary policy, FOMC calendar, all that stuff, right? They're going to put the PDF file. So you can see these are all the previous historical FOMC meetings. You can look here at statements, which is where it's going to be. All right, so it's going to be a PDF file. The Fed minutes, when they drop theirs, which is going to be in a couple weeks, it's going to be on the right side here. But the actual rate hike decision and statement is going to be here. And so you go down here. This is the one we're at right now. At 2 p.m., you're going to be able to refresh this and click the PDF or the HTML. If you look at this, right now, the current last rate was, I believe, let me see exactly what it was so you guys can know exactly what number to look for. So, again, last rate hike decision, let me see. Yeah, the last rate hike decision was 250. They're expecting 325. And so if this comes out and it says, it says in this that they're raising it to 3.25. That's going to make 75 basis points. It's going to be 0.75% rate hike, right? And then you'll know it's 75 basis points. That's how you know. All right. So here last was 2.5. This is the number to look at. And so you can basically open this up, look at this 2.5. If this number here on this newest report says 3.25 or 3 and 1/4, 3 and 1/4, then you're going to know that it's 75 basis points. If it says 3 and 1/2, then it's going to be 100 basis points. If it says 3, then it's going to be 50 basis points. All right, so that's how you calculate it the fastest. But again, it depends on what you want to do. You could just wait 10 seconds and just get the actual number. It depends on what you want to do. I'm going to do everything, to be honest. I'm going to look at it and figure it out as soon as it drops. But like, if you want to know how to really analyze like the data that the Fed Reserve is going to give you as soon as it comes out, that all these other algorithms are interpreting for you, that's how you do it. That's what you look at. All right, guys, 10 minutes. What's going to happen? Nobody knows. But yeah, 10 minutes. Market's actually ripping up. Market's bullish right now. 386.60s in the market. So, hey, big movement here. Big movement. Yeah, after the rate hike decision, we are also going to be trading in the Top Step Combine. Again, you can see our profit graph so far on this Combine. We're doing okay. We're doing okay. Today, we lost a little bit of money. That's all right. Wait. Yeah, we lost a couple hundred today, which is fine. Here's our profit graph the whole time so far. So here's our profit graph on the Top Step Combine. Again, they give you a demo. If you can hit their target while following their rules, they fund you. So far, this is our profit graph. We are still up, about $900 gross in this account, but this is our profit graph. So we're doing well. We're probably going to trade this. They are a sponsor of our video, but essentially the futures market has no PDT rules. So you can day trade short, do whatever you want to do in the futures market with no PDT, and essentially trade the SPY, which is what we're watching right here for the FOMC meeting. Here's the SPY right here. You can trade the E-mini, which is essentially the same thing in the futures market, no PDT rule, and trade these type of economic releases. And Top Step funds you. So they give you a demo. If you can hit their targets on the demo while following their rules, they fund you between $50 up to over $100,000 up to $150K with a 90% split. They're regulated by the Chicago Mercantile Exchange. They pay out millions every year. They fund thousands of traders a year. And so they are a sponsor of our video. Great way to help support the channel. And if you want to check them out, I'll post this link. I'll also pin it to the top of the page. Again, great way to help support free content here. We drop all the big major economic releases. So if you want to check them out, here's that link. I will also pin this to the top so you guys can access it. It's also in the description. But yeah, market's starting to push up to test highs. We're not going to trade, though. Just to put this in perspective, we're not going to be trading as soon as the data drops. We're probably going to wait for the press conference to end as well. I'm not going to be trying to trade that craziness that happens from, these economic releases. Again, as soon as they come out, you're going to see big volatility. And that's something to be very careful with, because you will see big volatility when these numbers drop. It's not easy to trade. It's not something that I recommend trading. I think you need to let things settle down. Try to find a reasonable and reliable trend to attack once things settle down a little bit. At least that's my plan. Of course, not an investment professional. I'm certainly not claiming to be an expert, and we'll see what happens. This is important as to decide the overall market trend till this year end. No, we got one more FOMC meeting. So it happens every 6 weeks. So again, every 6 weeks, the Fed meets. Weeks after that, they have the Fed minutes PDF file that drops. Every 6 weeks, they drop the interest rate at 2 p.m. On a Wednesday. They drop the interest rate decision at 2 p.m. on a Wednesday every 6 weeks. And then CPI, which is an inflationary data, drops every month. The last one was last Tuesday. Expectations for inflation came in at 8.1%. Inflation ended up showing 8.3%. So higher inflation than initially expected, higher inflation than expectations. And in that regard, that's probably influencing this Fed rate decision. But we will have another Fed meeting before the end of the year. Again, they happen every 6 weeks. So, the next Fed meeting will probably happen. Let's see. The next Fed meeting will probably happen at the beginning of November, I'm assuming. At the beginning of November sometime is when the next Fed meeting will be after this one. So again, we'll see. 100 is not going to happen. Hey, what's up, Nita? Yeah, all good. All good. Yeah, we're going to announce the rate as soon as it comes out. We're also going to stream the press conference. Don't worry. All right, guys. SPY up to 386s. So again, testing the top of the range, very choppy day. Again, we didn't trade today that much. We ended up taking a few small losses and then kind of bowing out for the day. Again, I've seen a lot of these big fundamental releases. I've seen a lot of FOMC meetings. I've seen a lot of CPI reports, and it's always incredibly risky. The only edge I think you can really do with these type of things is buying far outside the money options. That'll probably expire worthless. And if we do get a brash reaction, like a big knee-jerk reaction in one direction, then you can maybe make some with a small risk, but it's just a low probability trade. But I think in terms of risk reward, it's high, right? But I'm certainly not recommending anybody do that. Again, it's very difficult to predict what's going to happen here. Common expectations are for 75 basis points, but again, we don't know. Even if we show 75, which is what is almost certainly going to happen, we don't know what that type of reaction is going to be. Again, I'm guessing we bounce from that, but we could easily just tank. And again, there's also a possibility of 100 basis points. And again, we don't know the reaction. People could see 100 basis points as an optimistic thing, combating the high inflation that we're facing right now with economic uncertainty. People could look at it like that, or they could say, man, the Fed's having to raise rates 100 basis points just to curb inflation. That's bearish, and the market could tank. Again, we have been dropping a little bit over the last couple of days with a small rebound today, but we're mostly neutral heading into this. We got 4 minutes, less than 4 minutes, about 3.5. And yeah, y'all hit that subscribe button. We'll see what we get. 2:30 Eastern Standard Time is when the FOMC meet. What if 50 basis points? The market will probably rip. That's going to be a really optimistic thing if it's 50, but it's incredibly unlikely, I think. All right, guys. 3 minutes, team. Markets are pumping up. Look at the Q up there to almost 291. It's time, guys. It's time. Y'all be safe. Remember, it could get crazy. We'll see. All right, Q, pop it up. Yeah, y'all hit the like button. We got almost 1,700 people here. And, yeah, let me see. We got 173 likes, man. Come on now. I'm not saying I would ever pressure you to hit the like button, but if you don't, you know how it goes. We'll hate you forever over here. 100 basis points. I don't think so. Again, my guess is 75. I might be wildly wrong here, though. We might just be wildly wrong. Again, less than 3 minutes, about 2 minutes now. Bitcoin over 19.5K. Q breaking highs just now as we speak, up to over 291s. Bullish response in tech, in the tech heavy Q. Q pump it up. SPY push it up to 386.90 right now, almost 387 as we speak. So the markets are ripping up ahead of this announcement. Again, y'all forgive me for a second. We're going to be positioning ourselves to report this as soon as we get it. So y'all bear with me here, guys. We're going to pull up all our different ways to look at it. Yeah, we'll see. Pulling up everything now. Y'all bear with me. We got less than 2 minutes. Again, we're going to have multiple different sources up to pull this up. And then we're also going to pull up the actual like PDF file. And then we're just going to look at all of it and see what we get first. Again, the big number to look at, if you want to look at the actual PDF file to see it as soon as it comes out, the easiest way to do this, guys, and again, we got about a minute left. Okay. I'm going to post this link. If you want to try to see it as soon as it comes out, if for some reason y'all get it before me, here is the link. Okay. If this says, again, their expectational numbers here are for a 3.25% yearly rate so far. Okay. Last time it was 2.5. And so if you see 3.25 or 3 1/4, that means it's 75 basis points. If you open that PDF file and you say they're increasing it from 250 to 3.25 or 3 1/4, then that means they're raising it 75 basis points. Okay. That's the big thing to understand. So again, 3 1/4 is what you want to look for. 3 1/4 in the HTML file. If you go to this link right here, again, this link right here, 3 1/4, less than a minute. We're also going to put it in sub-only mode here, guys, during this sub-only mode. Y'all do me a favor, hit the subscribe button if you haven't already. We are in sub-only mode now. We got about 10 seconds. Do me a favor, hit the subscribe button. Here we go. Ten seconds, guys. Markets rip it up. Maybe it's some early information here. Maybe it's some early information. I'm steady refreshing. Nothing yet. All right, there's the time. Let's refresh. Yeah, it hasn't showed up yet. Nothing yet. Waiting. All right, target 3.25 versus 3.125 expected. So it did show the Fed funds target rate is 3.25. 75 basis points is what they raised. So 75 basis points, and the market is tanking here on this news. 75 basis points is what they announced. They raised rates 75 basis points. All right, 75 basis points, and man, I was wrong. The market is just tanking down here. I thought we might rip up, but the market is just flying down on this data. Big drops. But yeah, 75 basis points. Market is tanking fast. Wow. I told you guys, I have no idea. We can only guess what the market's going to react here. And the market's reacting bearishly here. I might buy up some stuff in discounts now. I'm going to look at some large caps. But man, market's falling down to 382.70s here. 382.70s. Yeah, market is absolutely flying down here right now. Look at the market tank. Down to 382.20s right now. Huge dips in the market. Huge drops. Huge tanks in the market right now, guys. Again, huge dips. Market's starting to rebound a little bit with some down wicks here, but big drop, 75 basis points to 3.25 as expected. Again, I told you guys it was almost certain that they were going to raise it by 75 basis points. If you want to see the Fed statement regarding this rate hike decision, we're going to post this link here. Basically said recent indicators point to modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broader price pressures. Russia's war against Ukraine is causing tremendous human and economic hardship. The war and related events are creating additional upward pressure on inflation and are weighing on global economic activity. The committee is highly attentive to inflation risks. They to achieve maximum employment and inflation at the rate of 2% over the long run. And in support of these goals, the committee decided to raise the target range for the Fed funds rate to 3 1/4, 3 1/4. That is essentially what they said. And again, the market is tanking here, mostly from this statement and what they said regarding it. Again, we are still having the FOMC. I think it's Jerome Powell speaking at 2:30 in about 28 minutes. So stick around. We're going to be covering and streaming that live here as it happens as well. But that is what happened. Market's tanking. Go down to September 20th, 21st. Again, here's the link. If you guys want to see the actual link, here you go. Oh, wait. That's the link right there. Yeah, market's starting to bounce back a little bit. SPY up there, Q. Still testing these lows here. 382 is essentially the low of the day in the SPY. But yeah, 75 basis points. U.S. 10-year Treasury yields are rise to 3.64%. It's the highest since 2011. They said 1.25 percentage points of rate increases remain in 2022, 0.25 percentage point rate increase in 23. Yeah, so highest level since 08. Markets are starting to tank on this. Again, they said, quote, "We will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate, and recent indicators point to the modest growth in spending and production. Job gains have been robust in recent months, and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic, higher food and energy prices, and broad price pressures," end quote. And that was from the FOMC statement. So again, 2 p.m. Press conference is going to be live here at 2 p.m. If you want to see the actual report, here it is. Again, the link is right here to the report. We're going to put the link in the description so you guys can find it. Might be easier that way. There you go. In the description now. You should be able to reset it. Market breaking lows here, team. Market just broke lows down to 381s right now. 381s, 381.20s, right around 381 whole dollar level on the SPY. So the market is tanking. Yeah, dude, if it was 100, the market would have just tanked, like really fell. Again, we posted in the chat one more time. There's the link right there if you want to see the actual report. Does Ethereum rip it up? Yeah, Bitcoin falling. ETH falling as well. So yeah, everything's falling. Again, not what I would expect, but again, as I said, I had some own speculations, but you never know with this type of stuff. Yeah, so market's reacting bearish here. Starting to bounce up a little bit. There's a green candle. Again, I'm not going to trade this. There's too much volatility in this, so. All right, market bouncing back a little bit here. Let's see a red candle starting to show up. Again, the actual press conference is going to be at 2:30. Man, you think you can spell right, bro? I didn't even spell press conference right on the title. Oh, man. You think you're smart. There you go. All right, so yeah, we got the press conference coming at 2 p.m., team. All right, guys, raise rate 75 basis points. Market is starting to consolidate a little bit here. Again, here is what the Fed did. Raise rates 75 basis points. The press conference, again, is going to be streamed here live at 2 p.m. What would happen if it's 100? It would probably tank even more. But maybe we bounce back. 75 is good or bad. Well, the market reacted bearishly. I don't think it was necessarily bad. It's aggressive, but I think it's what's expected. To a certain extent, there's still a chance we might rebound. We got some opening volatility here. Hopefully, JP says some positive things, and we still have a chance that we might rebound. I'm hoping we do. But I ended up getting flat in all my swing trade positions anyway. Y'all do me a favor, hit the subscribe button. We're pretty close to hitting 86,000 subscribers. Do me a favor, hit that subscribe button now. Run those numbers up. The market's actually starting to rebound. You can see Tesla specifically kind of leading the pack here. Here's Tesla. Tesla's starting to rebound back up to 306.30s, pulling everything else up. Apple up here is down at 155.40s. So they're all kind of following the broader markets. But again, Tesla's starting to rebound. Hopefully we get the markets to rebound as well. Here's the Q, which is a little bit more tech heavy, but yeah, we had some initial dips. The previous closing price, the level at which we go red to green, is right around 384s. And so there's a chance that we might break back over that if the bullish action continues. And if that's the case, then we're still going to be technically green on the day. And so it is a somewhat neutral reaction. Still we got time, but yeah, we could come back and end green. At least I'm hoping that's what happens. And the market's kind of looking like that. All right, market just popped over the previous closing price on the day. So market just popped over the previous closing price. Still got time. Again, press conference is going to be streamed live here at 2:30 p.m. Eastern Standard Time in about 21 minutes. Yeah, great moment for puts for sure. Puts are rolling in money right now. Again, Tesla rebounding, Snap rebounding, market's starting to come back a little bit. We tested that previous closing price. We still got time. The Fed did decide to raise rates 75 basis points. And we actually got the press conference streaming live here at 2 p.m. Again, we'll see what they say, but the markets are starting to correct a little bit here. We got one red candle, but let's see if we can go green. 384 is the red to green level, so 384. $75 is good or bad. 75 is expected. I'm not going to say good or bad because there's a little bit more nuance than that, but it's what's expected. Market's starting to pop back up over 383 for a split second. Q back up to 287.50 or so. It's trying to rebound here, trying to come back. Again, 230 in 20 minutes. Again, press conference live here at 2:30 p.m. Eastern Standard Time. Again, what do you guys think you're going to say? Bullish or bearish on the press conference? Again, 2:30, guys, live here at 2:30. Again, SPY up there to 382.50s. We got the Q at 287.12s. Again, y'all do me a favor, hit the subscribe button. Help us hit 86,000 subscribers. We're probably close to it. Hopefully we hit 86,000 sometime soon. We're getting close. Y'all do me a favor, hit that subscribe button, guys. Hit the notification bell. We certainly appreciate you all. And I'm not really going to trade yet. I don't think that's necessarily a good move right now. I still think there's too much volatility, and I'm going to wait for things to settle down. But hopefully we get some rebounds here. We've seen some bull action over the last 10 minutes or so. Hopefully we continue to see it. Bear short everything. Hope Powell gives us a better speech than the one at Jackson Hole. Yeah, he just said some really bearish things at the JH conference. So hopefully he says some better things here. And again, I want you guys to understand, like, 75 basis points is already baked in. And so a lot of this is going to depend. A lot of the reason we're dropping right now is because the bearish, hawkish stance that they said here. So this all is the reason we're dropping right now. Everything they said leading up to this, they said modest growth in spending and production. Job gains have been high. Unemployment low. Inflation is high. Supply and demand imbalances related to higher food and energy prices, Russia problems. So they basically said a lot of problems here, and that is causing this bearish reaction in stocks. But if Jerome Powell comes along and says some positive things during this FOMC conference, it could rebound the market. Again, maybe not. Market might just continue to tank. I think there's also a very high chance he says bearish things. But we'll see. We'll see. Good luck, guys. I hope you guys make some money in this. Shout out to the puts. They made some money in this as well. Bitcoin dropping here. Yeah, which is understandable. I mean, Bitcoin's been following the broader market lately, so it's understandable to see it drop. All right, we also have Jerome Powell speaking on Friday here. We're going to cover that here as well, guys. So stick around. We are going to be covering that live as it happens also. What exactly is the FOMC meeting? It's the Federal Open Market Committee's interest rate decision. It's their decision on whether they want to raise or lower interest rates. The reason they're aggressively raising rates right now, which 75 basis point is aggressive, the reason they're doing so is because we're in a time of high inflation. We got the problems going on in Russia. We got the stuff from 2020 and all that stuff from the C word going on. And so in that regard, they're aggressively raising rates. Again, aggressively raising rates causes short-term pain, but it does more to combat inflation. They raise rates in order to discourage spending because the higher the rates, the less people are spending, the more competitors and businesses have to lower pricing in order to compensate for that. And so they raise rates in order to discourage spending to combat inflation. So they're aggressively raising rates right now, but when they do so, it causes short-term pain, which is what we're seeing. Market dropping down under 381 right now, testing 380. We've had 6 red candles in a row so far. So the market is certainly reacting negatively here to the 75 basis point rate hike decision. The FOMC meeting is today. It's in 16 minutes. We're going to stream it live here. Jerome Powell, the FOMC, it's just a press conference. They already announced the rate hike decision, though. It's 75 basis points. They're going to touch on that, talk about why they did it during this press conference. And then Friday, Jerome Powell speaking as well. And then we have the Fed minutes in a couple weeks. That's, we're going to get that in a couple weeks also. Traded, bro. Yeah. Longs did get liquidated. Again, I got out of all my long positions. If you guys have been watching my stream for the past couple of days, I was holding Disney. I ended up cutting it. I'm just not going to hold anything through this. I understand, I thought we might get a bullish reaction to the 75 basis point rate hike, but I also understand that you never know. If you guys heard me talk about it before the rate hike announcement was made, I have no idea what they're going to do. I don't know how the market's going to react either. And so it's just very risky. It's very coin flip like to where it's like there's not really any edge taking any sizable positions ahead of time. I know it's fun to gamble a little bit. I think you can do so with small size and be okay, but you can also buy far outside the money puts and hope for a big reaction like this or something like that. But I'm just not taking any positions. We might take some positions now, like once the dust settles from this, but I got it at 18.8. Yeah, you're still okay then. We did cover the announcement live as soon as it happened. We dropped it within like 10 seconds. Again, I showed you guys exactly how to access it as well. You just go to the Federal Reserve website. It's a PDF or HTML file, or HTML page, I should say, depending on which way you look at it. But you can also just look at all the major news sources. I started to interpret it, but I actually had one of the news sources that I followed report it before I could even do anything within like 10 seconds. So we certainly dropped it live. It's already over now. 75 basis point rate hike was already announced, and then the press conference is in 13 minutes. Hi, where can we see your positions? My swing trades. I'm not going to show you what I'm holding. I'm not an investment professional. I'm not telling people to buy anything. I'm not even claiming to be an expert. We're just a resource and community for traders. We don't sell anything. We don't charge for anything. We don't claim to be experts. I don't even claim to be a good trader. I'd rather just trade how I want to trade and without pressure. Pressure kills profit. And so I'm not trying to be some trading guru. We're just a resource where we give you guys free information. You appreciate that? Hit the subscribe button, guys. We certainly appreciate you guys doing so. Market's starting to test lows here, down at 380.50s right now on the SPY. Hey, nice, Prav. Hey, thank you, brother. I appreciate it. Hey, nice, Andrew. Congrats, bro. Hey, good trades, dude. Hey, thank you. Thank you, Matt. Hey, thank you, sir. Yeah, top 3 in the world. Definitely top 3. Market's starting to test lows. Q down there at 285s. SPY at 380s. Again, the Fed meeting's in about 12 minutes, team. 12 minutes. We'll see if we get something good. Hey, thank you, X. Thank you. Hey, thank you, Denise. I appreciate it. Yeah, like I said, you guys can see my trades. I don't tell you guys exactly what I'm holding because I don't like that type of pressure, to be honest. But again, I will show you my Disney trades. And again, this is my swing trades. You want to see how I swing trade? Number one, I've been showing you my day trading profit graph every day anyway. So here's my profit graph of day trading, right? So here's my day trading over the last 5 days. All right, we lost a little bit today, but this is my graph over the last 5 days. All right, this is pulled directly from my platform. Here are my Disney swing trades over the past couple of days. You want to see my Disney swing trades? Here they are. We ended up cutting our last position back yesterday morning, which looks to be the right move considering what happened. I liquidated all my swing trades over the last couple weeks ahead of this. And you can see we buy at lows, we sell at the top. We buy bottom, sell at the top. We scale in towards we add to the bottom, sell at the top. We buy towards the bottom down here. We take profit up there. we buy here, sell up there. So we kind of take very quick short-term trades, most of the time playing off of extension is what I try to do. Look, and you can see I got out of my swing trades. I'm not just kind of BSing you to sound good. We actually cut everything. I'm not holding through these big meetings. I cover all the big ones. I see how the market reacts. I'm not trying to gamble on what happens. I'm not saying you can't. Somebody might be able to do it better than me, but I'm not good at, taking positions ahead of these things. I think it's just too much volatility for me there. Yeah, we try. Market's starting to rebound a little bit, testing the bottom of this range. You can see we bounce right off the bottom range here, starting to move back up. We'll see. Again, they got the press conference at 2:30, guys, in about 10 minutes. How do you determine when to buy or sell? Well, my swing trading strategy is actually really simple. I look for healthy, long-term blue chip companies that I don't mind holding long-term if I have to. And I wait for big extended drops and I buy those dips. And then I hold for a couple days and wait for it to rebound. And if I lose too much, I end up cutting it. Very simple. All right, guys. We got the Fed meeting coming up. Again, let me know what you guys think. Market's starting to rebound here. 9 minutes, team, 9 minutes. Should we expect to move after the conference? You should probably expect to move during the conference, depending on what he says, whether it's bearish or bullish, whether it's interpreted as bearish or bullish. It is subjective, I guess. But whether it's interpreted as good or bad, you're going to see some reactions in the stocks and broader markets, equities market, and crypto market as well. Crypto kind of follows the stock market as well, and especially with fundamental data, they're going to do the same thing essentially as the equities markets. And futures and stuff like that. But yeah, depending on what he says, you're going to get some reactions. Now, to what degree, I'm not sure. But you're going to get some reactions almost certainly. The bull run start. Hey, I hope we bounce back. Look, we're in 4 green candles in a row. We're looking at a 1 minute chart. Here's the Q. So we're looking at that as well. We'll see. Again, we've had such big movement here. 286.70s on the Q. So, again, we'll see. But why do people react to him when they know he's lying? I don't get it. You talking about Jerome Powell? Because he's the Fed chairman. They're going to react to him. It's just kind of how it goes. He's influencing monetary policy over the entire country. And so at least him and everybody that works there. And it's a tough job, man. I mean, listen, I know people hate him. I get it, but it's a tough job, man. Market does well. They don't give him credit. Market does bad. They blame him for everything, and so it's just a tough job. I wouldn't want that job. Yeah, his job is to control, inflation, and so no matter what, if he raises rates too much, people are going to say, oh, too much short-term pain. I can't believe you. If he doesn't raise rates enough, they're going to say, oh, it's not enough to combat inflation, right? So it's a balancing act, and it's very subjective, on what's good or bad monetary policy. SPY at 381.50s, Q at 286.60s. All right, guys. 7 minutes, less than 7 minutes. Please tell me bullish or bearish. I tend to be a bull now. I think we're down so much from the reaction that I tend to be a bull, but I'm a cautiously optimistic bull. Again, I understand that we could just get a huge negative reaction. That's kind of what I said before. I said I'm going to remain cautiously optimistic if we show 75 basis points, which is what was expected, that we'd have a positive reaction. I was wrong. Market just tanked. But again, I kind of prefaced everything beforehand with, look, you never know. It's just a guess. Like, nobody really knows how the market's going to react, except for maybe the big banks. They kind of have an idea, I'm assuming. But aside from that, nobody really knows what the market's going to think here and how the market's going to react. Again, they could interpret it as 75 basis points is so aggressive that it's bad. And they could interpret it also on the other side. It's saying, hey, 75 basis points is good. It's what was expected, and it's combating inflation. So aggressive is necessary. And so it's a subjective thing. Hey, what's up, Tiny? Hey, all good. Yeah, of course, Tiny. Good to see you. Thank you. Yeah, hopefully markets start to rebound here. We're starting to back over 382s on the SPY. We got 6 minutes, about 5.5 minutes, really. About 5 minutes. So stick around. Meeting starts soon. All right, team. Hey, 5 minutes, guys. 5 minutes. Let's do this. Y'all do me a favor, hit the subscribe button. Help me hit 86,000. We're getting pretty close to hitting 86,000 subscribers. Market's starting to rebound here. Again, we drop free fundamental data. We don't charge for anything. Everything we put out there is free. And so if you appreciate that, you're free. If you appreciate stock market communities that don't try to sell you a course, hit the subscribe button. We do this live every weekday for free. Certainly appreciate it. SPY starting to rebound here, starting to move up. We have the previous closing price already here. This is a relevant level. It's right around 384s on the SPY. On the Q, it's right around 288.50 or so. So if we can break over those levels, those markets and those ETFs will essentially be green on the day. If we can break over 384 on the SPY, if we can break over 288.60 or so on the Q. So that's what we want. That'll signify a green day. And that's what we want, not the band. We want to see it move up. At least I do. We should want to see the markets move up. Hey, thank you, Solstice. I appreciate you. Thank you. Okay, bro. For everybody hating on the Fed Reserve Chairman Jerome Powell, let me ask you guys a serious question, and I want you guys to be honest and be objective about it. Be real. If you had the opportunity to be the Fed Reserve Chairman right now, would you take it? If you say no, you're probably lying. Okay, I would take that job in a heartbeat. I don't care. Everybody can hate me. Okay, I don't care. Y'all know y'all are gonna do the same thing. Okay, y'all can hate on them. I get it. I really do. I understand. But come on now. Market's starting to rebound here, back up to 383. So if we break over 384s, we're actually technically green on the day. So we've had out of the last like 10 candles, we've only had one red candle. Hey, all good. Short everything. Hey, I don't know. Yeah, right. I take it. They make millions. F it. Hate me if you want. That's okay. Millions can solve a lot of problems here. SPY started to bounce back. We're getting a little bit of a pullback. Let's see if it holds at 280. And I'm just being honest, okay? Let's just be real. All right, guys. Less than 3 minutes. About 2 minutes. Yeah, and it's not just decided by Powell. Y'all gotta understand, this is a group of people deciding these things. It's not just one guy. It's not just Powell over there. 382 is getting tested now. So again, whole dollar support maybe here on the SPY. We got less than 3 minutes. What blows my mind is the DXY. Well, the DXY is a lot of the time, aside from today, is going to have an inverse relationship with the equities market, right? So strong dollar means people aren't going to want to buy equities. Their dollars are getting value, and so in that regard, a lot of the time it's an inverse relationship. So you can actually see it did the opposite of what this was. So right, the market ripped up, or the dollar ripped up, but the market tanked. All right, guys, let's get ready for this press conference here. Bear with me. Give me 1 second. We're going to find it. We got about a minute left. Bear with me. Let's get everything ready. All right, guys, we're sitting here live waiting for the meeting to start. Y'all can hear the music, right? Let's do a sound check before it starts so we can make sure. Yeah, we're definitely going to cut the music here. We're going to cut it right now. We got about 30 seconds left and before the meeting starts. It's about to start right now. Waiting for this to start here, guys, so bear with me. All right, they got to hold music here. So we're going to mute everything while we wait for this to start. Again, it should be starting right now. All right, here we go. All right, guys. Sound check. You should be able to. You can't hear anything now. They're not saying anything yet. There we go. Bear with me. Pun intended, I guess. Market's starting to dip as we say this here. It's down to 381s. All right, there's the man. Let's make sure the sound's working. It should be. Sound check. 1 2 1 2. Y'all can hear. All right, here we go. Market's starting to dip. Getting ready to maybe test lows at 380.50 as Jerome Powell is about to speak.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised its policy interest rate by 0.75 percentage point, and we anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%.
Market bouncing.
In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employee employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the consumer price index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services.
Market bouncing.
Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular. to achieve a period of growth below trend, and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs. There's some signs that some wage measures may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation we're seeing, we think we'll need to, and in light of what I just said, we think that we'll need to bring our funds rate to a restrictive level and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things. First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between supply and demand. And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Steve.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and inflation. So that's how we think about that. Your second question, sorry, was? Is there a point in time you could see pausing? Is it linear that you keep raising rates, or is there? Oh, I'm sorry.
I should know better than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go.
Market breaking highs.
Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold. As I mentioned, what we think we need to do and should do is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time. But we're not at that level. Clearly today, we've just moved, I think, probably into the very lowest level of what might be restrictive. And certainly in my view and in the view of the committee, there's a ways to go.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with it. Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect because we see the current situation as outside of historical experience in a number of ways. And I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored. As I've said, there's no basis for complacency there. But to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in inflation. So these are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked for now. Supply chain disruptions are beginning to resolve. Those developments, if sustained, could help ease the pressures on inflation. So let me just say how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood that restoring price stability while achieving a relatively modest decline, a rather increase in unemployment, and a soft landing would be very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and whether, also do we get more labor supply, which would help as well. In addition, the chances of a soft landing are likely to diminish to the extent that policy needs to be more restrictive or restrictive for longer. Nonetheless, we're committed to getting inflation back down to 2% because we think that a failure to restore price stability would mean far greater pain later on.
Are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yes, vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are really very good ways to look at how tight the labor market is and how different it is from other cycles where generally the unemployment rate itself is the single best indicator. We think those things have for quite a time now really added value in terms of understanding where the labor market is.
Nick.
Nick Timmeros at the Wall Street Journal. You said not too long ago in describing the policy destination, there's still a way to go. But I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point. And so I was wondering if you could discuss how you are thinking about, as the data come in, where that destination is, how it's moving up if inflation doesn't perform as you expect. Do you want to have a policy rate that's above the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that, I mean is meaningfully putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging assessment. So what do you look at? You look at broader financial conditions, as you know, you look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings. And you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think about, you measure those against some sort of forward-looking assessment of inflation inflation expectations, I think you would see at that time, you'd see positive real rates across the yield curve. And that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here, given there's some discussion now of overdoing it. What's the incentive to continue front loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is inflation our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I would say that if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. So that's how we think about it.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now and not something I expect to be considering in the near term. It's just, it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Thanks. Neil Irwin with Axios. A number of commentators have come to the view, and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think of coordination with your fellow central bankers? And is there much risk of overdoing it on a global level?
So we actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together and that we put together on our own, always try to take all of that into account. I mean, I can't say that we do it perfectly, but it's not as if we don't think about the policy decisions, monetary policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times. But really we're in very different situations. But I will tell you that our contact is more or less ongoing, and it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future. And indeed, Treasury rates moved up. So we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient? And does it mean that we might need a possibly higher terminal rate?
But they got to fix the static.
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds and housing price increases moving down. So we're having an effect on interest sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash. So there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that. And that's a good thing because that means the economy will be more resistant to to a significant downturn. But of course we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Mike, thank you.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward looking and the lags in your policy are forward looking and you don't know what they are, how will you know, or will you know?
Coming along,
if
hurting my
you've gone
trade.
too far?
Come on, bro.
So I don't know what the odds are. I think that there's a very high likelihood that we'll have a period of what I've mentioned is below trend growth, by which I mean much lower growth. And we're seeing that now. So the median forecast, I think, this year for among my colleagues and me was 0.2% growth. So that's very slow growth. And then below trend next year, I think the median was 1.2, also well below. So that's a slower, that's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this: inflation. What we hear from people when we meet with them is that they really are suffering from inflation, and if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
Well, how will you know, or will you know, if you've gone too far?
It's hard to hypothetically deal with that question. I mean, our really tight focus now continues to be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability. And you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. you don't have a cushion. And this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were, a way to just wish it away, but there isn't. We have to get supply and demand back into alignment. And the way we do that is by slowing the economy. Hopefully we do that by slowing the economy and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability. And I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that and keep it for another long period of time. To pull back from the task of doing that is you're just postponing. The record shows that if you postpone that, the delay is only likely to lead to more pain. So, I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
Thank you for taking the question, Mr. Chairman. Edward Lawrence for Fox Business. So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
How long? I mean, it really depends on how long it takes for wages and more than that, prices to come down, for inflation to come down. And what you see in our projections today is that inflation moves down significantly over the course of next year, and then more the next year after that. And, I think once you're on that path, that's a good thing. And things will start to feel better to people. They'll feel lower inflation. They'll feel the economy is improving. And also, if our projections are close to right, you will see that, that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs. And we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period. This era has been noted for very long expansions. We've had 3 of the 4 longest in measured history since we got inflation under control. And that's not an accident. So when inflation is low and stable, you can have these 9, 10, 11, 10-year expansions. And you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in since we started keeping track of that. So we want to get back to that, but to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight monetary policy for a period of time.
As a follow-up, what is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to restore price stability and then having to come back and do it, down the road again, and doing it at a time when actually now people have really come to expect, high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and get this job done and keep at it until it's done.
Nicole from CNN. Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you just got to assume that it's going to remain pretty high for a while.
Market correcting all the way back down.
Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, when we get to, let's assume we do get to that level, which I think is likely, what you're going to do is you're going to adjust that for some forward-looking measure of inflation. And, that could be, you pick your measure. It could be, there are all kinds of different things you can pick and you get, but what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term, I think, that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I mean, I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves whether our policy is in the right place as we go. Thank you very much.
All right, is that it? Is he done? I think that's it. All right, guys. All right, team. So that is the FOMC conference. We're going to stick around and trade for a little bit. You can kind of see us going back and forth. We're trading on Top Step, which is a funded account program for futures. And so if you want to day trade, you can get around the PDT rule in the futures market. I'm essentially trading this SPY right here, the S&P 500, with the E-mini futures contract. You can day trade short as much as you want with much less money than you need in day trading equities with 25K. Top Step is a funded account program. They are a sponsor of this video, so check them out. Essentially, they give you a demo, and this is a company that's regulated by the Chicago Mercantile Exchange. They pay out millions every year. They fund thousands of traders a year, so it's a legitimate prop firm. They essentially give you a demo, and if you can hit their targets on the demo while following their rules, they fund you between $50,000 up to $150,000 with a legit funded account program, prop firm, whatever you want to call it. And yeah, if you want to check them out, I'll post this link here. We're in the 150K combine. Again, you can see our profit graph right here. Here's our graph today. So we're actually losing today, but this is our 7-day graph here. So while we're losing today, we're still green over the last 7 days. Not doing too bad here. Here's the link if you want to check it out. The rules are I have to hit 9K in profit. I can't lose over $4,500 or $3,000 per day. is essentially the rules. Outside of that, you got a max daily loss. You can trade 15 contracts max, which is a ton. If you trade like the E-mini, that's so much size. You don't need that much. I probably trade 3-4 contracts max. I very rarely trade over that. And yeah, that's the rules. You can find that link to the top of the page if you want. We appreciate everybody joining us. Y'all be sure to hit the subscribe button. We're pretty close to hitting 87 or 86,000 subscribers. So if you haven't already, guys, hit the subscribe button. We certainly appreciate the love and support. Interesting meeting here. So we're mostly choppy. Again, we're very neutral. We're essentially right where we were when we got the rate hike decision announcement here. So we're very neutral. Again, as we said, 75 basis points is a neutral neutral reaction. And so just a neutral reaction, nothing too crazy. Market's starting to rebound here back over VWAP. But again, we're just going to kind of sit back and wait. We don't really have a trend to attack now, and we'll see what we get. I thought the meeting was okay. I felt like Jerome Powell was trying to say positive things because he didn't want to crash the market, essentially, is what he was trying to say. I felt like people were asking him some tough questions, and understandably so. And I feel like he was trying to say positive things, is what I thought he was saying. I got the feeling he didn't want to affect the market negatively, especially after Jackson Hole. So, it is what it is. But again, we're pretty neutral. We're slightly red. Here's when the announcement was made at 2 p.m. And again, you can see we are just below that now. Like the announcement was made right here, essentially. Let's see where the open of this candle was, 3901. So yeah, the announcement was made right here, and we are just underneath that. So a very neutral reaction to the Fed meeting here. We'll see about a VWAP reclaim. GG to you, sir. If you're going to cry, okay, listen. We sit here and we stream free stock market data. So if you're going to cry like Raphael over here because we end up promoting affiliate links or sponsors, like you're just not reasonable. You're just butthurt, bro. Like get over it. You'll be okay. In the end, I sit here for hours every day. If you think I'm doing this out of the kindness of my heart, you're just not being reasonable, to be honest. Of course we make money doing this. That's the whole point of doing this. You think I'm just sitting here for nothing? Anybody that claims to, you shouldn't trust them anyway, because if you're being honest, we're here to make money. Let's be real here for a second. And so, yeah, if you want to help support free content, we do it all by giving you free content, though. And so, of course, we don't charge for a course. We don't sell you a course. We don't sell a service. I don't even claim to be an expert. And so, hey, hit the subscribe button, guys. You want to. Just to make Raphael mad, hit the sub button, guys, if you haven't already. And, yeah, let me know what you guys think. We're pulling back now. We'll see if we get something good. And, oh, man, did I just chew him out when he was actually supportive? If I did, my apologies, Raphael. Let me look. Maybe I did, bro. If I did, I'm an idiot. Everybody make fun of me. He is just asking for subscribers and referral code for platform. I don't know, man. It's hard to tell. I'll unban him just in case. But it's hard for me to tell, to be honest. Usually I just kind of ban people that talk smack real quick. Right. Yeah, like, dude, we're all here to make money. So if you're mad at me for making money, I mean, you're just not being reasonable. I'll unban him just in case that was the reason. Look, we'll unhide him. There you go. Raphael, you're the talk of the town right now. So, we'll see. Yeah, y'all hit the like button. Yeah, look, y'all know me, bro. I'm a tyrant over here. My name used to be John the Tyrannical, bro. I will ban you in a heartbeat. I don't care. Okay. I love you all. I would never pressure you to subscribe, but if you don't, I'll hate you forever. Okay, do it now. Hit the subscribe button, guys. You know you want to. Market's starting to rebound here. It's at beginner trades. Don't do it, Lieutenant. Don't do it, bro. Hey, no worries. Raphael was my least favorite Ninja Turtle. Hey, listen. I was listen. I was more of a Michelangelo guy, okay, if we're being honest here. Let's just be real here for a second. Michelangelo was the GOAT Ninja Turtle. He was better than all of them, You know what I mean? And so let's just be real here for Donatello, I mean. Hey, what's with the FOMC meeting? I don't know. Leonardo. I don't know. Yeah, Leonardo. I mean, he's all right. All right, market's starting to pull back down here. Let's see if it actually holds. We'll see. We're going to try to trade here. We're going to try to trade. Hey, thank you, Lieutenant, my man. Thank you, brother. I appreciate you. Yeah, as long as you don't like pineapple on your pizza, I mean, you can be here. I mean, we could like pizza, okay? But pineapple on pizza is unnatural. We're just being divisive in here today. All right. We got 68 votes. Again, very neutral reaction to the FOMC meeting, just to put this in perspective. We announced the 75 point rate hike. It felt like Jerome Powell was trying to say positive things, which is good, I guess. I mean, that bad question ended up affecting me. But again, we're pretty neutral. Here's our profit graph, right? So here's our profit graph so far. Splinter, the GOAT. Right. Hey, it really does. Honestly, haters think they're doing something. They actually help, to be honest. So what's the minimum you have to have in the account for day trading? So in futures, there is no minimum. I mean, in order to have a margin account, you got to get approved for futures. On Top Step, it just goes by packages, right? So Top Step, there's the base one. The base one's like 50K, so you'll get 50K in funding if you can pass their testing. That's $165 minus 25% if you use my link. And again, people can get mad at it, but like in the end, the reality of it is, it's going to teach you to be a better trader. Like having these rules to follow is going to teach you to be a better trader. Like here's me so far, right? We started this a couple days ago. And just to log into my dashboard real quick so y'all can see kind of my progress here. This is my account so far, right? So we are doing okay. Oh, wait, that's the wrong account. That's my old account. Let me go to this one. There we go. All right, so here's the right one. We are up $822, right? We're $822 there out of 9K. You can see my profit graph right here as well. So here's my profit graph, right? So this is the graph I'm using. This is like my P&L over the last 4 days of trading here. Last 4 days, about 944 in gross profit. So not bad, but this is my profit graph. And again, we're essentially trading the SPY here, but you can see worst day was 67, best day was 380. They also have this coach here where it's going to teach you to be a better trader regardless. So I can give myself rules, right? Like I give myself 40 day trades per day max. If I start trading over 40, I feel like I'm chasing a little bit. And I'm following my rules. 4 trade losing trade max. We've only had 2 losses today in a row. We haven't come anywhere near 1,200, so we're doing okay. We're doing okay. We've been following our rules, and regardless of whether you've traded the futures market or not, it's just a good way to test yourself out. The base one's $160 minus 20%. So I mean, the base one is $130 something. Not bad, very cheap. And if you get funded, great. If you don't get funded, it's at least going to test yourself. And it's a good way to kind of get better at trading, in my opinion. Yeah. Pineapple. Pizza now. I know, honestly, you know what really sucks about getting old here? Okay, I'm going to tell you guys a story. Okay. Over the past 2 years, I am unable to eat donuts. I eat a donut, I get sick, bro. Okay. I eat a donut, I get so sick. It's the worst thing ever. Like, getting old is cruel. If you're young now, enjoy it. Eat good now, because over the last 2 years, I can't eat tomato sauce or donuts. Okay. Acid reflux is horrible. It's the worst thing ever. Okay. I eat half a donut, I'm sick in bed all day. A donut, like a freaking donut. I love donuts. Mary Lee Donuts, the GOAT donut place, aside from Krispy Kreme, unless they're warm, but that's a different story. But I can't eat pizza anymore. I can't eat pizza or donuts. Some of the best things ever. It's getting old is cruel. I'm telling you, if you're young, enjoy that, because it doesn't last, man. It doesn't last. Puts on pizza. I mean, listen, dude, I can't even eat pizza anymore, man. Last time I had pizza, I got sick. I can't have ketchup anymore. I grew up in Baton Rouge, Louisiana, so I went to Cane's a lot. I can't have Cane's. I can't eat the ketchup. I can't eat chicken without ketchup. You know what I mean? I can't even have Cane's anymore. Like, getting old is cruel. I've tried Tom's. It doesn't work. It's not age, it's stress. No, it's not. One donut will put me in bed for hours and hours. I could be having a great day. And this happened the other day. I went to Starbucks with my daughter because my daughter wanted, a pink drink from Starbucks, right? So we go to Starbucks and I get one of their glazed donuts, and I forgot I couldn't eat donuts. And I eat literally like 30% of a donut. And then I just go about my day. Within 30 minutes, I am super sick. Like somebody told me I might be allergic to gluten. That's plausible. I'll have to test that. But I got to get one of those food sensitivity tests. But it was horrible, bro. What's the least you have to have in the account to get around the PDT rule? For what? For futures? Just broad futures, not Top Step? I would say you probably need a couple thousand, with a margin account, and then use leverage to trade 1 or 2 contracts in the micros or something like that. Like, you could get around the PDT rule that way. And on Top Step, it goes by packages. Again, check out Top Step if you want. There's the link. But yeah. Sugar, processed sugar. Yeah. I'm just bummed out, dude. You look young, though. Hey, thank you, Adrian. I mean, I appreciate it, man. I'm in my 30s, but I appreciate it. I'm somewhat young. I don't know. Depends on what you classify as young, but hey, I appreciate it, man. But yeah, guys. All right, so we're still trading here. Again, we're down on the day, but it's not a big day. We're down like 150 or so. We're just such a sideways range here. I just don't know if I trust this. How do you check yourself for stomach cancer? I mean, I've already had an endoscopy a year or two ago. This all started a couple years ago, and then I need to do a colonoscopy. But I think it's more plausible that I'm just sensitive to stuff, man. You know, try a gluten-free donut. Yeah, I'm just saying that because I got acid reflux over the last couple years, and it's horrible. It's the worst thing ever. All right, we're going to short the market. We're right under the previous closing price here, so we're shorting the market in futures. We got 2 contracts here, and we'll cut this pretty fast. Yeah, market starts to rebound. We're just going to say, hey, we're done. We're done poking around at it. Market's just too unreliable in one direction. Now, I've already had the H. pylori test, so I have had that tested. I have gotten tested for that already, to be honest. All right, market started to break down. Looks weak. We're going to hold on to the short position we have. We're not going to take profit yet. We're going to hope that we break down and start testing lows. But again, I mean, I don't know. In the end, it's a small trade. 2 contracts to the micros here. If we start to get into like $20 or $30 in profit territory, then we might start to take some profit. But until then, we're just going to sit back and hope the market breaks down. Here we go. All right, we're up $40. We'll go ahead and take half off there. Let the rest break down a little bit more here since we're so far in the green. Market's starting to look weak. All right, we'll go ahead and take out. So we just made about 50 there just now. Not bad. So Top Step 1 is a funded account program. So they have packages, bro. So they have packages. The base one's $165 a month, right? They give you a demo account. If you can hit the target on their demo account while following their rules, they fund you the same amount. Base one's $50K. They give you a $50K demo. If you can hit $3,000 in profit without hitting, I think, $1,000 max loss per day or $1,500 total in losses, they fund you $50K. They fund you $50K. Right. The one I'm in is the $150K one. So if I hit this, then I get $150K in funding. But we also trade like a $30,000 account on TOS. So it's not like we're just only trading demo accounts, right? Like we were on TOS earlier. Our TOS account, our Thinkorswim account, is $30,000, right? We get about $120K in buying power on Thinkorswim for our $30,000 account. So if I want to trade stocks, I'm around the PDT rule anyway. But I'm also sponsored by Top Step, and I'm trying to get funded on there too, right? So I'm doing both right now. But yeah, that's the way it works. And again, you can find the link in the description if you're interested. Exercising has really improved my GERD. Hey, I'll try it. I go to the gym 3 times, usually at least 2 or 3 times a week, though. So it's like I'm pretty active in the gym. I run, I lift weights, I do all that stuff. Usually at least twice a week. Usually we go Sunday. We go a few days. I don't want to be too specific about my schedule, but we go to the gym, and so. What happens if you get funded and take a big loss? Well, they end up cutting you off. You have parameters when you're funded as well. So they have risk measures. And understandably so. Listen, if they're giving you 150K, like they're gonna make sure you're not about to just lose their money. You know what I mean? And if they didn't, what would happen is people would get funded and just swing for the fences and try to just get like a 50 or 60K win. You know what I mean? And they would just kind of manipulate that system. So instead, they give you risk parameters you have to follow once you're funded as well. I think they're a little bit looser, but a little bit more loose, but still. If you want to see like some Top Step videos here, I'll post this link. Look, let me find the link. Here it is. So here's like a video on Top Step. Top Step's the most legit one. Like you got a lot of funded account programs these days. Top Step's been around the longest. And again, you can just look at their numbers in terms of like what they put out. Here's a video kind of about Top Step number 1 if you want more data. They would just YOLO that account until they make like 100K and then just kind of or lose 100K, and that's the problem. And so, but yeah, you can look at their numbers in terms of like what they're funding people, right? So like here's their numbers. So just in 21, they paid out $3.3 million, not in funding, but in actual withdrawals from traders in their funded accounts, right? So traders got funded, and then you can process withdrawals monthly or however much you want to. Really, they paid out over $3 million in payouts and withdrawals to their funded traders, right? And they only keep 10%. So once you're funded, you keep 90% of your profit. they funded almost 8,400 accounts in 21 out of 143 countries. 97% of funded traders say that it improved their trading in 10 years they've been around for 10 years. So yeah, you can check out the stuff in the description. Market's starting to break down here. Yeah, I don't know when the last time I weighed myself. I'm probably like 165, 170 pounds. I was really, really skinny all my life. And I only started to gain weight once I got old and, actually started eating. I just didn't eat enough. I got ADHD. So I just never ate enough. I didn't have time to eat. I was always kind of like, even when I sit here, like if my wife joins me on stream, my leg just shakes constantly. She has to like say, yo, stop, because I'm just constantly moving. I pace around. My son has it now, unfortunately, but it's a good and bad thing. You can channel it, right? Apple market starting to test lows, breaking down here. Look at the SPY break or the E-mini here break. So here's the lows of the day. And let's see if we break that low range. Thanks for doing these lives on important events. It really helps. Hey, no worries, Camille. All good, brother. Thank you, man. Appreciate y'all being here. Right now, it's not TEFs. Right now, this is called Quant Tower. This is the platform, Quant Tower. So quant, like a trading quant, Quantower is what this platform is called, Quant Tower. Why'd we break down? I don't know. The Fed meeting is over, and so people are just kind of watching things now. Yeah, I don't know why we broke down, but yeah, that actually makes sense, James. Oh, and I'm a big fidgeter, bro. I fidget nonstop. My son's exactly like I was when I was young, man. He just he's a smart kid, but he has ADHD and, smart kid though. Starting to break down here. Micro E-mini breaking lows. Just broke under the low of the day, or not quite under the low of the day on the SPY yet. We're right around it. So we're testing it now. We're pretty close though. Starting to dump underneath this here. So you can see it's starting to break here. And we'll see if we actually break lows now. We still got about 28 minutes until the market closes. Hey, John, I don't know if you'll know this, but was wondering why the S&P 500 premium was higher today than previous days. Probably because of the volatility. I'm guessing it's because of the volatility that accompanies a big Fed announcement or conference in the Fed meeting. I'm sure the premiums are a little bit higher on days like today because they understand that if you buy like far outside the money options, you can get some like big knee-jerk reactions as we're getting kind of right now and capitalize with small risk. And so they're going to make you pay a premium for that is what I'm assuming. But, you're on TradeNet, Boel, right? They don't allow US users though. They're good. I mean, I worked with them a lot before. I know them really well. But they don't allow US users anymore, unfortunately. But they're solid. I like TEF's platform. It's great. Yeah, we trade crypto. We have a crypto channel. If y'all want to go subscribe to it, it's called Beginner Crypto. YouTube.com/Beginner Crypto. I appreciate it if you guys go hit the subscribe button there. We got about 930 subscribers on that channel. Here's the link if you want to go subscribe. We appreciate it. All good. Yeah, no worries, man. For tomorrow, jobless claims, would higher jobless claims be better for the market? Theoretically, yes. By that logic, when we get higher jobless claims, that means more unemployment, which in turn means less free spending. And by that logic, lower inflation, hopefully. And now it's not an exact science, as is anything here. Nothing here is exact science. I mean, but theoretically, yes, higher unemployment right now could be considered a bullish thing because it means less spending and in turn less inflation, lower inflation, right? Again, it's all theoretical, it's all subjective, and nobody really knows exactly how the market is going to respond to that. But over the last couple of months, I think except for maybe last week's release, that's been the reaction, is that more unemployment equals bullish stock market reaction because of inflation problems, right? So, but again, just pure speculation. Yeah, Andrew Huberman's got some interesting stuff. I actually saw him drop some stuff on Twitter recently. Let me see. Hey, thank you all for the follows today, man. We got a bunch of follows on Twitter. Shout out to you guys. Yeah, he's got something on how to quit smoking. I smoked for years and years. Okay, so I smoked for years and years. The way I quit is very simple. A lot of the time, it's the fixation that you have with it. And so the way I quit was I went from smoking cigarettes to vaping nicotine. And then I went from vaping nicotine to vaping CBD. And then I went from vaping CBD to vaping those vapes that don't have anything in them. And then I went from doing that to nothing, right? So I stair-stepped it down, you know, and by doing so, I quit first time, didn't even try that hard, was very easy to quit, you know. But again, that's my own personal experience. I can't say for sure what's going to help anybody else. So he's got some interesting stuff dropping on cannabis right now, which is really interesting. He said data on cannabis use in young people leading to schizophrenia and psychosis later in life, even after cessation, are striking. Interesting. He said whether cannabis potentially increases or potentially decreases sexual arousal depends on your pre-intake prolactin levels, regardless of if you are male or female. Higher prolactin at baseline predicts anti-arousal effect of cannabis. Interesting, man. Andrew Huberman's a smart guy. Yeah, I like some Sarsies. Exactly, Smile. That's right. What percentage of your wallet do you put on each trade? Well, it depends on my risk tolerance that day and how confident I am in the position. Most of the time, like, here's a good example. I bought 60 shares of Disney out of about 120K buying power account. So what's Disney at right now? Disney is currently at 105. So we bought 6,300 shares or $6,300 worth. So about 20% of my account, you know, so 20% or so of my account per trade. But it's not like Disney's going to go to zero either. And so that's not a real judge on like risk versus reward. Disney's not going to go to zero. There's zero chance of that happening short term in the type of swing trading time frame I'm using. So I'm not risking that either. So my actual risk per trade is less than that. That's just the amount I'm using in each trade. Right. 100%, Jared. That's actually plausible too, for sure. All right, guys, I'm going to go ahead and close it down. Very interesting markets today. Very interesting markets. Very interesting. Again, if you want to check out Top Step, they are a sponsor of our video. You can check out the link in the description. You can check out the link pinned at the top of the page. You can join us on Discord. We certainly appreciate it. And we'll see if we get something interesting. You can also check out Stonk.tech. Stonk.tech is a trading social media platform. Their job is to help retail traders. They're going to be going live hopefully sometime this month or next month. You can join the wait list. They're going to give you free dark point option flow access when they go live. And I'll post this link in chat as well as in the description. I appreciate everybody joining me here today. Again, if you're interested, check out Top Step. They're a great sponsor, great platform. I think they're just good for traders, to be honest, man. They help traders test themselves, even if you can't get funded. And it's difficult to get funded on Top Step. It's certainly not easy. It's very difficult to get funded because they're actually funding you money, right? They're really giving you 50K. They're really giving you 150K if you can pass their testing. And so they're going to give you strict rules to follow, of course, as would you if you were funding somebody that money. But regardless of whether you get funded or not, it's a cheap way to test yourself in the futures market and get an introduction to the futures market as long as you have reasonable expectations for it. Check them out. Great way to help support the channel, guys. Love you all. I appreciate everybody joining me here today. Hit that subscribe button. We will be back tomorrow, bright and early tomorrow morning. We got some economic data dropping tomorrow with jobless claims coming out. And tomorrow we have jobless claims numbers dropping, I believe, at 8:30. We have jobless claims numbers coming out. We're going to be covering those live as they happen. Yeah, jobless claims numbers dropping. Friday, we have the Fed speaking. Again, we got Jerome Powell speaking again, I believe. Let me see. I believe it's at 2 p.m. It's at 2 p.m. Fed. Powell is going to be speaking again on Friday. And so y'all be ready for that. Hit the subscribe button. We cover all the major economic data, CPI, PPI, PCE numbers, jobless claims, unemployment data, whatever you guys want. We cover it all here live every week, every single weekday as well. So y'all hit the subscribe button. Good luck. We appreciate everybody joining us here today, and we'll see you guys next time. See you guys in the morning.